and I turned $1,900 into almost $900,000 in 2 years. And it was doing by this technique. Well, this is my first time I do something like this. I haven't done anything. The Twitter space thing is new for me, so bear with me if I have any technical issues or something like that. My name is Eduardo Briseño. You know me as EduTrades. There's a reason why I'm doing this. I've seen a lot of interest in this scalping thing, and I guess it's good to address some things that are definitely gonna be useful for you guys. It's not that only interest in the good way. I've been really attacked by so many people that hate scalping. So what we're gonna cover here is it worth scalping? I know you guys have an idea of what scalping is, but I'm just gonna share with you a little bit of my experience doing this, and I'm gonna give you a little bit of a background. I'm an electrical engineer. I've been trading for the last 8 years. I started trading in 2000 with real money in 2015. I joined the Team Sites Challenge. Back then, I was under PDT rule for about maybe 3 years or so, and I started seeing patterns. So what I learned from that time was, as I was under the PDT, I get to pick the stocks really, really well. If I don't pick the stocks really well, it was going to be a disaster for me. So that's why I think that time was the core for what I was about to do in 2019, 2020, and blah, blah, blah. Okay, so when I left the PDT, when I was over the PDT, I saw that I was pretty good at reading the tape. And, well, I started scaling up a little bit my trades and trying to take advantage of the noise of each trade, but never forgetting about the big picture. So I came up with this kind of technique where I recycle shares in a core idea. So it was in 2019. I was trading with really little money. I was above PDT, but I was trading with little money. And I never get to grow my account, because every single penny that I earn in 2018 and 2019, I spend it because I had to maintain myself here. So I complemented my income with shitty jobs, and I get to 2020 really well prepared. I'm gonna talk about a little bit of what I do, of the technique that I'm doing, but basically in 2020 I took advantage of the volatility, crazy volatility in the market in 2020, and I turned $1,900 into almost $900,000 in 2 years. And it was doing by this technique. I call it technique, I don't call it strategy, because I use probably all the strategies they use the big traders, right? The gurus and stuff. I'm really into the pattern thing and the pump and dump scheme in small caps and all these schemes that make you that chart pattern in the penny stocks framework, which is the huge spikes and the huge squeezes, and then they go down because of dilution, because of dump, because blah 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 blah. All the drill about all these lack of fundamental and maybe lack of financial health in these kind of stocks. So let's dive in a little bit in what scalping is for me and what's the definition of scalping. Scalping is just taking advantage of small moves, and I know why people hate it, and I know why gurus and big professional traders hate scalping is because you have such poor risk reward on these kind of plays. Like I remember back in the days when I was trying to adapt this strategy or this technique, I remember winning a lot of times, and like one loss will wipe up all my gains. Like it was crazy because I was focusing only in the micro setup or in the little moves, and that's what scalping is. Well, what I do is a little bit different because when you see all those crazy charts, that you see a lot of triangles there, I don't lose my position. Like I what I'm doing is recycling shares. So what I do is recycle shares around a core idea, which is defined by a stop loss, which tell me that I'm wrong in that thesis, in that big picture thesis that I have. This only works in small caps because I know very well the supply and demand game in small caps. So I try to look for the imbalance in the supply and demand on the big picture kind of idea. And big picture doesn't mean just bigger time frames than just 1 or 5 minutes. It means like I see the pump and dump scheme on them with the dilution. I see charts, I see patterns, I see institutional ownership, whether is it greater than 50%, for example, they tend to behave a little bit different. I see history charts, I see statistics, I see catalyst. So as you can see, there's no way a scalper just see price action and tape. Like I see a lot of things in order to create a bias, so I can see whether this trade will be short or will be a long on the day. And I set my stop losses in a way that it tells me that I'm wrong in that thesis. So pretty much if I'm wrong in that thesis, maybe if I'm short, maybe all the shorts that are in that thesis are probably wrong too. So that's why sometimes I get to flip bias in some patterns. Okay, so I let the tape guide me a lot, but I have like my sort of areas which I buy and sell regarding the supply and demand and the imbalance that I see in each one of those areas. So let's see. And what it is really important in my technique is the risk management. Like the risk management is the key of this, and it all comes to position sizing. That's why I don't get to use enough size. So I don't get to use large size. I get to use very little size. When I talk about very little size, it's less than $30,000. Like if I go beyond that, I get into liquidity issues, and that's one of the main downsides of this technique, that you don't get to scale a lot, because if you do, you're gonna get in a lot of trouble with risk management and liquidity. So that's why, and this is the main reason, I am heading into more risk-reward strategies. Okay. By the way, I'm doing this as an introduction, so you can participate and you can put your, maybe your point of view, or if you have any questions, you can ask me, and we're all going to participate in this. Just I'm giving you a little bit of background and a little bit of introduction. So what's the key things of this strategy is that it has a high winning rate. It is over 80%, and I have this all in my statistics. By the way, you can see all of what I'm saying. You can see each one of the trades that I make. You can see it in Kimfo. I cannot edit the trades. I cannot erase any of the trades. The app Kimfo, it's connected directly to my broker, so there's no way I can edit or anything like that. So it's all transparent. You can see each one of the trades that I make. So what you can see there, you also can see my statistics. You can see that my winning rate is really high. It's above 80%. But the risk reward, though, it's really poor. And I know that, I don't know if you guys have tried this, but it is really, really unlikely that you can find a trading system where you can have high winning rate and high risk reward. It's really, really, really unlikely. And if you do find it, please let me know, because it's really, really difficult to find. So mine has really high winning rate, but really, really poor risk reward. So what's other downside of my technique is you have big drawdowns. 10% of the times that I get stop out full size, it's the biggest drawdowns that I have in my system. Sometimes that drawdown takes maybe half or 3/4 of my profits on the day. So what I'm working all day long, like all day long from 7 a.m. to maybe 11 a.m., I can get wipe it out in one trade. That's the risk of this strategy. But as you can see in my Kinfo for the last 3.5 years, I have a really steady equity curve, and that is because you don't get the whole drawdown, because I was winning money when I get the drawdown. So maybe if I have like a $10,000 drawdown, I was maybe winning, I don't know, maybe 5,000. And what you see in the statistic is that a day of a drawdown, I have a $5,000 drawdown, which is not that much. All right, so that's why you see that curve like really, really steady. But it's not that I don't have drawdowns. I have really, really big drawdowns, and I think one of the traits that you have to have in order to perform this kind of technique is a huge psychology. Like, you have to be really, really prepared in your mindset that you will get these kind of drawdowns if you're using these kind of strategies or this kind of techniques. I want to address something else that is regarding stress. Many people that passion this strategies or this technique say that I'm a really stressful guy, and says that I will not live any longer and I will lead to poverty and blah blah blah. Well, that's not true. I'm really relaxed guy. I know that here are a lot of people that know me. I do live trading with like 30 people every single day in my group. So people see me trading, see me the trades that I'm taking, and ask them if once I've been stressed out because of my technique. What I get stressed out is when I don't respect my risk, is when my position is too big, or for example when I trade something that I haven't done my due diligence very well. So that's when I get stressed out. Not because I get in and out. Like, I get stressed out if, for example, if I have a big position, even if it's a winning position, if I don't like get into my pocket, like if I have 3,000 shares and I don't like take profits of at least 200 shares, like, I get stressed out. That's what stresses me out, not the technique itself. So I guess there are people that are made for this. I guess there are people who can party all day long, right? And that's a pretty amazing thing to accomplish. There are people that do marathons and can run for, I don't know, maybe 80 miles, and then they don't get like, tired about that or something like that, because they're made for that. I think my personality, my background, my risk tolerance is made for this strategy. But as I said, as it has the downside of it is that I don't get to scale enough. I want to be a 8-figure, a 9-figure trader. So with this strategy, yeah, it's really cool to make $500,000 a year, and that's amazing. But I mean, I want more. And if I want more, I cannot use this technique to achieve that. If I want to achieve that, I have to be more focused on the risk-reward kind of strategies. Okay, one two last things that I'm going to, and I'm going to wrap it up, this introduction. My influence, first, the big picture. Tim Sykes and Tim Grittani were the ones that introduced me to this and give me the whole big picture idea. Tim with his penny stock framework and Tim Grittani with the whole pattern thing gave me the perspective that I need in order to perform this kind of technique. Risk management, Tim Grittani, you got to see trading tickers 1 and 2. That's gold. Recycling, I don't know if you see Bao, the MIC. He's one of the best guys that I've ever seen in recycling shares, and that's where I get that idea from. Filings and fundamentals, especially. We have my friend here, Michael Good, who's listening to us. He got me like introduced to the whole fundamentals kind of things. Also, Ricky Analog and Ali. Ali is, I think, Trading Fit Girl on Twitter. They have such great like content regarding fundamentals and filings. I do take a look at the fundamentals because I can see that the supply can have a huge imbalance when you got things like ATMs, like warrants, and all those kind of stuff. Interpreting technicals, I got that from Jay Trader. I was with him like a year, and it was awesome. Right now, I'm in IU community, Investors Underground community, with Nate, and he has taught me a lot about mindset. Also, the other guy that was really influenced in me in the mindset kind of, regarding mindset, was Mike Spinoza. He is, I think, he's Risk Life Mike on Twitter. Statistics and patterns, obviously Dux. He's also an influence in me in the short. And the longs, my man Roland Wolf. The tools that I use for this kind of technique, the broker I use, the primary broker would be Guardian, Cobra, and TradeZero. The platform will be Dash Trader. This is the best one that I can think about. And I use hotkeys. Like I use 2 set of hotkeys, so I can, one I buy on one and the other one I short. Blue light glasses is really important for me. If I don't get those glasses, it's crazy because I focus a lot on the tape. So if I stare at the tape for hours and I don't have my glasses, my head starts to hurt. So you have to have a great internet. You have to have like a decent PC, and I use 5 screens because I trade a lot of stocks at a time. So that's why I'm telling you that it's not scalping, because I obviously use the noise of the of the trends. I'm a trend friend, right? I only, if I see a downtrend, I short. If I see an uptrend, I long. That's pretty much it. Like, it's really, really simple. I don't get like those reversal crazy moves. And the last thing that I will talk about, so you can participate also, that I'm really, really excited to hear you, what are you going to say. My recommendations to you, and hopefully this is going to be useful in some kind of way for you. And the first thing would be, the big picture idea always win. Like, if I don't get my big picture idea clear at like a pre-market, it will be a losing day. Like, there's no way that if I don't have my big picture accurate, I will probably lose money. All right. Even if you see a lot of triangles on those charts, I will lose money if I don't have the big picture really, really clear. The other thing is, risk reward strategies are the way to go. Like, this technique that I developed, I think it was kind of a survival mode kind of reaction that I had, and I put a little bit of creativity on it. It fit my personality, and I took it, and I've been successful at it because I know it very, very well, and I know myself with it very, very well. But I think on a big picture kind of ideas, I think risk-reward strategies are the way to go. As you guys know, I teach people how to trade in Spanish, And this is what I teach them. Like, I teach them how to spot that big picture idea. I don't teach them how to, get in and out as I do it, because I taught it in a way before, like a few years ago, and people like were right beside me, and they were doing the same thing that I was doing, and they were losing money and I wasn't. Like, it is that kind of weird that this is. So recommend risk reward strategies. The other thing is, find something that fits your personality. Like, I've been getting attacked by every single person that I know in Twitter, because I think they're really like involved with their idea of making money on the markets. And I can't stress this enough. You can make money in the markets in any way. Like, there are so many ways to make money in the markets. There's no one proper way. Obviously, you have your course, you have your rules, risk management, and all those kind of things that we all know. But there's not only one way to make money in the markets. And if somebody tells you that it's the only way, pretty much run from them, because there are a lot of ways. That's why I'm learning from all the gurus out there. It's like, I've been all over the place. If you know me, I've been in every single chat room that there is on the community, on the trading community. I've learned from a lot of people, and I've been getting a lot of inputs from those guys, and they're like the core of my strategies and my way to do things. But my style, it's mine. Like, this is like an art, and there's no painter or artist that will tell another painter that that's not the way to go. And that's how I see it. Okay.